You know, when we think about critical infrastructure, our minds usually jump to things like power grids or highways. But what about the systems that make our homes and offices, well, livable? Today, we're pulling back the curtain on Watsco, the quiet giant that sits at the very heart of the massive HVAC industry. From an investor's point of view, this is a really fascinating story about absolute dominance in a market most of us never even think about.
All right, so here's how we're going to break this down. First, we'll get a handle on what Watsco actually does. Then we're going to dig into its competitive moat, what protects it. After that, we'll look at its buy and build growth machine, check out its rock-solid financials, and finally, we'll wrap it all up with the investor's verdict.
So let's kick things off with Section 1, HVAC's undisputed leader. We need to understand the business that's at the very core of climate control.
And really, that's the big question, isn't it? The HVAC distribution market in North America is just enormous. We're talking over $70 billion, but it kind of operates in the shadows. And Watsco isn't just another company in this space, they are the leader. So how on earth did they pull that off?
Well, it really starts with what they sell. You can see the huge chunk, nearly 70%, comes from big equipment like AC units and furnaces. But honestly, the real secret sauce might be in that other 27%, all the other parts and supplies. See, by having everything a contractor could possibly need, they become the essential, go-to, one-stop shop. That is absolutely critical.
And this makes their business model incredibly resilient. I mean, they're the biggest, serving a massive base of over 130,000 contractors. But here is the most important part for any investor. Almost 70% of their business comes from replacements. Think about it. When your air conditioner dies in the middle of a brutal summer, you're not shopping around for deals. It's an emergency. You need it fixed now. That creates a super stable demand that isn't really tied to the ups and downs of new home construction. Plus, they're focused on the Sunbelt, which is just adding fuel to the fire with all its growth. Okay, so that leads us right into Section 2, their competitive moat. Because for any long-term investor, this is the million-dollar question. What stops somebody else from coming in and eating their lunch? Let's take a look at Watsco's defenses, because they are formidable.
Now, you might think a distributor just has an advantage because of its warehouses and trucks, and yeah, that's part of it. But with Watsco, their real, honest-to-goodness secret weapon is technology. They've essentially turned themselves into a tech company that just happens to sell HVAC equipment.
Just look at this number for a second. $2.6 billion. That's their annual e-commerce sales. It's over a third of their total revenue. And we're not talking about some simple website here. This is a deeply integrated digital toolkit that contractors are using to run their entire businesses.
And here's the payoff. The data is crystal clear. Contractors who use these digital tools are 60% less likely to leave for a competitor. And they buy more stuff. From an investor's perspective, that is the holy grail. The technology makes their customers incredibly sticky, and that builds a moat that is very, very hard to cross. But wait, there's more. The moat gets even wider. Their gigantic scale gives them purchasing power that nobody can match. Their network of over 700 locations means they can get a part to a job site faster than anyone else. That last-mile advantage is huge. They've built their own software, like On-Call Air, that actually helps their customers sell more. And the foundation of all of this, their rock-solid partnership with Carrier, which makes up over half their revenue and basically locks competitors out of key markets. So how did they get so big in the first place? Well, that brings us to Section 3, the buy and build engine. This isn't just luck. It's a simple, powerful, and repeatable strategy they have been running like clockwork for decades. The whole philosophy is beautifully simple. Step 1, they buy successful, often family-owned local distributors who are already leaders in their area. But then comes the genius part. Step 2, the build. They don't just swallow these companies whole. They keep the local leadership and the local brand in place because those relationships are everything. And then they just pour gasoline on the fire with their technology, their capital, and their massive scale.
And man, do they have a track record. Since 1989, they've done this over 70 times. But check out that last point. There are still over 2,000 independent distributors out there. This market is incredibly fragmented, which means Watsco has a gigantic runway to keep executing this proven strategy for years, maybe even decades to come.
All right, let's talk money. Section 4, and what I like to call a fortress balance sheet. In a world where so many companies are loaded up with debt, Watsco's financial discipline is, by itself, a huge competitive advantage. Just let that number sink in. 0. A multi-billion-dollar market leader with 0 debt. That's almost unheard of. It gives them unbelievable flexibility. They can make acquisitions, invest in their business, handle any economic downturn, and they never have to worry about a banker breathing down their neck.
Now, take that zero debt number and pair it with this: 50 straight years of paying dividends. This isn't some flashy company burning through cash. It's a durable, cash-generating machine that has rewarded its shareholders consistently for half a century. The two of these together, that tells an incredible story of financial strength and discipline.
And they're not just maintaining the dividend, they are growing it and growing it aggressively. I mean, look at these recent hikes, double-digit increases one after another. That is a massive vote of confidence from management about the future of the business.
Okay, but we have to be honest here. It hasn't been a perfect straight line up. If you look at their profitability, you can see their margins have been squeezed a little bit over the last couple of years. Both gross and operating margins are down slightly. So as an investor, you have to ask the question, what's going on here?
But this isn't what you think. It's not a sign of the business getting weaker. It's actually the cost of playing the long game. This margin pressure is coming from deliberate strategic investments in technology and from the costs of leading the entire industry through a major transition to new, greener refrigerants. Simply put, they're spending money today to strengthen their leadership position for tomorrow.
So, after all that, what's the final verdict for an investor? Let's pull it all together in our last section and weigh the bull case against the bear case.
So here's the debate in a nutshell. The bull case is pretty compelling. You've got a dominant leader with a tech-powered moat, a perfect balance sheet, a resilient business, and a fantastic dividend story. The bear case, on the other hand, really boils down to three risks. They rely heavily on one supplier, Carrier, they have a controlled company structure, which we'll talk about in a sec, and, well, the stock is expensive. So what is a controlled company? It's a big deal. It means that because of a special class of stock, the founding Nahmad family actually controls more than 50% of the votes. For an outside investor, that is a critical piece of information. It means you have very little say in major decisions, like who's on the board. It's a real governance risk you absolutely have to be comfortable with. And that really brings us to the final crucial question you have to ask yourself. There's no doubt Watsco is a phenomenal, high-quality business. The market knows it, and you pay a premium price for the stock. So the question is that high price just the cost of owning one of the best companies out there, or has the price itself become the biggest risk of all? And that is the puzzle every investor has to solve.